Holy smokes, everyone. This is a quick, urgent update. We need to talk about what is happening in the markets right now. I haven't posted a video in a couple of days. I've been extremely busy, but we need to get in what's happening in the markets right now. Okay, so first things first, the market's obviously down today, about 1.5%. I'm recording this video before the market closes, but right now, the S&P's down around 1%, the Nasdaq's down around 1.5%. And we just had a recent, rebound after the Nasdaq fell about 20%. And, many people think maybe this is the bottom. Maybe the markets are about to recover. But like I've been talking about, people, we're going to have a lot of volatility. It's just not going to be a straight drop to the bottom. So what is causing this recent drop-off? And is this the bottom? You think it's going to get worse, or I think it's going to start rocketing back up to the moon? So first things first, something I need to cover, some data that came out, some crucial data that just came out recently, was the latest CPI data. And surprise, surprise, it was a big number. The CPI came in around 7.9%. So, like we've been talking about in the channel, all my viewers, you guys aren't going to be surprised. Inflation is getting worse, much worse. There's not much sun here, so I can take my sunnies off here, so I can look into your beautiful eyes. 7.9% for the CPI. Now, what are we seeing happen right now? Well, I'm driving right now, and guess what? It's getting pretty expensive to drive. I'm going to have to start riding a horse around with these gas prices and these petrol prices. So inflation's getting worse. What is that going to mean for the markets? Well, that means the Federal Reserve is going to have to get much, much more aggressive. I've been calling the Fed out for the past probably 8-9 months now. I've been saying, what the heck are they doing? They need to get ahead of this inflation that's going to be coming. Of course, the Fed said, look, don't worry, it's only transitory. It'll go away soon. There's nothing really to worry about. There's nothing really to fear. Well, we all see now, it's just getting worse, people. And I'm driving past a gas station now. See many parts here in Australia, and I did a post yesterday on the community tab. Many people around the world, they're absolutely terrified of the gas prices right now. And I'm really glad I can work from home now, because my last job, I used to have to commute about an hour and a half to and from work. So these high fuel costs would have been absolutely killing me. And I'm sure, a lot of people that are having to commute an hour and a half each way to work, they're definitely going to be feeling this. And this is going to have a big effect on the economy, because people are going to have less discretionary spending. It's going to be a huge input cost for businesses. So they're going to have their profit margins affected. And like I've shown you in the charts before, when oil goes above 50 above trend, well, then that triggers a recession every time. So I think what this latest CPI number, again, going back to that, I think these high fuel costs are going to start waking people up. Because, of course, me and my viewers, there's a guy actually riding a horse. I wish I could show you this, guys. There's actually a guy riding a horse on the side of the road. I don't know if you're going to see this in the corner of my car. Yeah, did you see that guy? We just passed him. That was pretty funny. Literally, just as I was talking about, I need to start getting a horse because of these high fuel costs. So yeah, that horse threw off my train of thought. Yeah, these high fuel costs, I think, are finally going to start waking people up to the inflation crisis that we have right now. Because, you know what they say about compound interest? Those that understand it, earn it. Those that don't, pay it. And they've said, compound interest is the 8th wonder of the world. So these little 2-3% interest rate, these 2 or 3% inflation increases, these price increases, people don't really feel it. But then it just slowly creeps up on them, and all of a sudden, their rent's $2,500 a month. Their grocery bills have doubled before you know it. But now we don't have 2-3% inflation. We've got 8% official CPI inflation, and we all know it's much higher than that, 16%. Of course, they all rigged the inflation data ever since the 80s. That's why we haven't had a huge inflation crisis since then, because they've changed the way the data. And it wouldn't surprise me if they start changing the way they record the data again. So this is obviously spooking the markets because we've got supply chain issues. The Federal Reserve can't fix that. And really, what that gives me another point with these supply chain issues. About a year ago, I think it's coming up to a year ago, the Suez Canal incident happened. And this was right after the Federal Reserve printed about 40% of all US dollars in existence. And they've just done huge amounts of stimulus. They sent out all these stimulus checks to multi-millionaires. Nobody's talking about right now in the government and at the Federal Reserve what's triggered this inflation. They sent out trillions and trillions of dollars of stimulus to people that don't need it. Now, don't get me wrong, there was lots of American families that were struggling that needed it, especially if they shut down your business. You had no choice. Of course, you should have got compensated. But there's multi-millionaires that got stimulus checks. Of course, they didn't need it. There was business owners that got these loans that were pretty much fraudulent. And you saw the articles there. There was people buying Lamborghinis with these loans because they didn't need it. And now, ever since 2020, they've actually increased the money supply. They've printed 80% of all US dollars in existence have been printed over the past 2 years. So yes, supply chain issues have played a factor, but the reason why there was such a supply chain issue was, of course, the shutdowns, but also because of the huge amount of demand from all the stimulus that was put out there. But of course, the government won't admit that. It's all the supply chain issues. It's all corporations being greedy and raising prices, and yeah, probably are to some extent. But again, like I've been showing you with the charts, commodities are actually skyrocketing right now, all commodities, especially wheat. So food prices are going to get much more expensive. So businesses just simply have to raise their prices because the input costs are going up. So that's something, I'm sick and tired of them not acknowledging the real reason why this is happening. And now, of course, when they question about why are fuel costs all of a sudden skyrocketing, of course, it's all because of what's going on with Russia and Ukraine, with what's going on with Putin, which that's playing a factor into what's happening right now. But what about the surge in fuel costs for the past 18 months? There was no war going on then. So this obviously just gives them a good excuse to blame the crisis that we're about to enter, because it's about to get much worse. So again, that was a bit of a tangent going on there. Reasons why inflation's getting worse, and I think why the markets are scared now, because the Federal Reserve has failed, and they've failed miserably. They should have lifted interest rates 6 months ago. And like I've said, these 0.25% rate hikes, it's like throwing a bucket of water on a bushfire or a jungle that's on fire. It's going to do absolutely nothing to stop this inflation. And all these people, the markets right now, they're priced in maybe 4 or 5 Federal Reserve rate hikes. So we're not going to see the markets absolutely collapse the first 4 or 5 Federal Reserve rate hikes, because the markets are trying to price that in right now. But what the markets aren't prepared for, and again what I've been warning about, this inflation is going to get much, much worse. What if they have to go to just 5% interest rates? Forget the Paul Volcker 10, 20% interest rates. Just 5% will be enough to absolutely collapse these markets because of all the leverage that are in the markets right now. And that is something I don't think the markets are priced in. That's something I don't think the markets are prepared for. And that's why I think we haven't seen this, V-shaped recovery. And again, a message to all these dip buyers that are buying right now. Remember, after the dot-com bubble in 2000, the NASDAQ didn't recover for about 15 years. Now, we've had an extraordinary bull run since 2008. We've had, low official CPI inflation. So they've had the luxury of every time the market has crashed to be able to print more and more money and drop interest rates lower and lower. But people, they don't have that luxury this time. We're going to face a huge recession from these surging oil costs. The markets are going to continue to decline. Like I said, I'm calling for a 20 to 30% drop in the S&P 500, not the NASDAQ, for me to start dollar cost averaging in. So we have not seen the worst of it yet. So people, if you're buying the dip right now and you're thinking that within 6 months, a year, the markets will be recovered, I hate to say it, but it may not. Now, again, I could be wrong. But me, when I do my investment decisions, I do it all on probabilities. What is the likelihood of us going back to all-time highs? And what is the likelihood of us just being on a slow decline and not recovering for possibly a decade? And I think that's something that investors aren't prepared for right now. But that's a real possibility, because like I said, I don't think they're going to be able to bail us out this time with printing more money. They can't lower interest rates. They're already at zero. They haven't even done one rate hike, and the markets are already completely pooping their pants. There's also another scenario which would absolutely be catastrophic for the markets and really for society at all. That's too catastrophic. I don't even really want to get into it. So people, to put it simply, what this means for you and me as investors: inflation's going to get worse. The Federal Reserve is going to have to keep lifting interest rates. Higher oil costs, higher fuel costs is going to trigger a recession. And I don't think there's anything the central banks can do to get us out of this one. That's just my thoughts and opinions. What do you think, everyone?